Okay, we'll call the meeting to order, and today we'll be hearing from the Canada Pension Plan Investment Board, pursuant to Standing Order 1082, which is the study of the Canada Pension Plan Investment Board. We hear from them at least annually, and with us today we have Mr. Macklin, who's the President and CEO, and Mr. Leduc, who's the Senior Managing Director and Global Head of Public Affairs and Communication. And I do believe that members have received their report as well. And I believe, Mr. Macklin, you have an opening statement. We'll start there and then go to questions. We have basically an hour. Welcome. They'll get the mic, Mark, no problem.
Good morning, Mr. Chair and members of the committee. C'est maintenant la troisième fois que je me présente devant.
This is the third time that I'm appearing before the committee since I've held the position of President of the CPP Investment Board. And this meeting is an important date in the calendar, and it gives our organisation opportunity to be accountable before Parliament, as it does with its tabling of its annual report.
He's our Senior Managing Director and Global Head of Public Affairs and Communications. CPPIB is a strong believer in the value of our public accountability and transparency. While we operate at arm's length from government, CPPIB is subject to rigorous accountability requirements which are laid out in the CPPIB Act. We go beyond our legislated requirements and make every effort to ensure federal and provincial stewards, as well as Canadians, are kept informed of our activities. As you know, we released our 2019 annual report earlier this month, which contains a wealth of information about our organization's activities over the course of the last year and key data related to our performance. Both Michelle and I welcome the opportunity to discuss with parliamentarians how CPPIB invests the funds entrusted to it and our role in helping ensure that Canada Pension Plan remains sustainable for future generations. CPPIB invests in a well-diversified global portfolio composed of multiple asset classes with different sources of returns and risk levels. And this approach clearly comes through as our investment teams take advantage of our international reach and competitive strengths. Our fiscal year began on a positive note, with global equity markets rising broadly. We then faced a public equity market downturn in our third quarter, followed by a sharp rebound in our fourth quarter of this fiscal year. Geopolitical risks are more acute, with unpredictable potential outcomes witnessed around the world. Both uncertainty caused by the US-China tensions and Brexit are putting a drag on global economic growth. Against these difficult market conditions, our investment departments work creatively to find, assess, and execute on new investment opportunities. Another factor reshaping the global investment environment is climate change. As a long-term investor, we seek to be a leader in understanding the risks and opportunities stemming from climate change. We've developed a comprehensive climate change program to ensure those risks are effectively considered throughout our portfolio, consistent with our investment objectives. We launched our inaugural green bond, becoming the first pension fund to do so globally. CPPIB continues to maintain its focus on our long-term investment strategy and objectives. We've gradually built a diversified global investment platform and are focused on executing a multi-year strategy. These are key drivers of our financial performance and our future success. CPPIB has a critical public purpose to help Canadians build financial security in retirement. To achieve that objective, our mandate is clear: to invest the assets of the CPP fund with a view to achieving a maximum rate of return without undue risk of loss, having regard to the factors that may affect the funding of the plan. I'm pleased to report that in fiscal 2019, CPPIB achieved a net nominal return of 8.9% as the fund grew to $392 billion. This represents an increase of $35.9 billion compared to last year, $32 billion of which were gains due to investment income, with $3.9 billion from net CPP contributions. While these are strong annual results, our focus is on contributing to the long-term sustainability of the fund. The fund achieved 10-year and 5-year annualized net nominal returns of 11.1% and 10.7% respectively. All of our performance results are reported net of all costs. In 2006, CPPIB made a strategic decision to move away from largely passive investments towards an active management strategy. The purpose was to capitalize on our inherent comparative advantages of scale, certainty of assets, and long-term investment horizon. CPPIB measures the performance of its active management strategy against rigorous market-based benchmarks. These reference portfolios represent passive portfolios of public market indices. CPPIB has generated $29.2 billion of compounded dollar value add since we started to build and operate our active programs. In fiscal 2019, active management produced returns that were $6.4 billion higher than the passive alternative. We believe actively managing the fund is prudent, responsible, and consistent with our statutory objectives, and we remain confident that this approach will continue to generate value-building growth for generations to come. However, in some periods, we anticipate the fund will experience negative performance, and periodic drops in value are consistent with the deliberate balancing of risk and returns in the portfolio. We need to take a prudent amount of risk in order to deliver strong long-term performance over multiple generations. Finally, I'd like to update the Standing Committee on the additional CPP. After extensive preparation over the last 2 years, our new investment framework for the additional CPP was successfully launched, with the first transfer received and invested in January. The centerpiece of our preparatory work was the careful design of an investment structure that allows CPPIB to meet its statutory objectives while taking into account the unique features of additional CPP. As the base and additional CPP have different actuarial funding requirements, they therefore have different risk profiles. There are no changes to the risk-return profile of the base CPP, while the additional CPP will have a more conservative risk target due to its fully funded nature. Most importantly, our structure ensures both portions have efficiently draw on our proven global investment platform that we already had in place. It's now been 20 years since we received the first $12 million to invest on behalf of Canadian contributors and beneficiaries. To achieve our public purpose and to help ensure that the CPP remains sustainable, CPPIB must continue to perform as an organization. We have a strategy in place to ensure that we're prepared for the range of possible investment environments in the future. On behalf of my colleagues, I'd like to thank the House of Commons Standing Committee on Finance again for inviting us today. I look forward to our discussion, and we're pleased to answer any questions. Thank you.
Thank you very much, Mr. Macklin, and also thank you for the annual report. We'll start with, I think we'll go to 5-minute rounds throughout, and we'll start with Ms. Bendayan.
Merci, Monsieur le Président. Thank you for your testimony this morning. You certainly noted the strong annual results of this year, which is good news. And the health of the CPP and the CPP expansion is good news for Canadians. I have a few questions with respect to the investments made or located in Canada. I was wondering if you could describe some of the criteria used by the CPPIB in selecting infrastructure assets, and to what extent you or that would include or favor infrastructure assets located in Canada.
Yeah, absolutely. So we like investing in infrastructure. It is aligned with our competitive advantages and the characteristics of what we're trying to achieve with the investment, which is long-term investment. So we like the long-term stability of infrastructure investments. We like, in particular, places where there are highly predictable regulatory regimes, highly predictable tax regimes, highly predictable long-term framework around those assets, and we like long-term concessions. Most importantly, though, we like scale investments, because in order to manage the cost of running the fund, we can't have enormous teams on standby in many different countries around the world. We have to focus the attention where the big opportunities are. And generally in infrastructure, we're looking for investment opportunities of over $500 million in size. So we tend to focus time and attention where there's a consistent pipeline of over $500 million opportunities where we can see what's coming this year, next year, the next few years, and be prepared to assess those opportunities. So we like the infrastructure investments that we have in Canada today. The 407 around Toronto is our largest investment in infrastructure globally. It's one of our largest investments in any asset class globally. And we also have renewable power assets in Ontario, a joint venture with Enbridge. We also have energy-related infrastructure assets in Alberta, and so we have a range of infrastructure investments in Canada, which we like, and we'd love to see more scale opportunities in Canada as elsewhere.
Vous avez mentionné quelques exemples en Ontario.
You gave a couple of examples in Ontario and in Alberta. Do you have any examples in Quebec of infrastructure investments?
You have the translation.
I don't think we have any scale investments in Alberta in direct infrastructure. I mean, two of our largest investments in Quebec, sort of related to infrastructure. One, WSP. We're a major shareholder in WSP. We own about $1.5 billion of that company, and that, I guess, that's related to infrastructure, and that it's an engineering related company. We also have a significant investment in Canadian National Railway.
Okay, Mr. Chair, if I have time for one more.
Yeah, you do.
To what extent do you take into account environmental, social, and governance factors in your investment decisions?
Yeah, that's very important to us. In fact, we publish every year as a detailed review of how we take into account those ESG factors, and we publish a sustainable investment report every year, going through all the detail of how we incorporate those factors. So there's but it is something that we take into account for every investment that we make, whether it's whether it's an infrastructure investment, or whether it's a private equity investment, or whether it's a public market investment.
Thank you very much, Mr. Chair.
A quick one on hand.
No, that's
okay. Mr. Kamish.
Thank you, Mr. Chair. If you could give me about a 2-minute warning, because I want to skip subjects. According to the Library of Parliament, you had 368 employees in 2007-2008. In 2017-2018, you had 1,498 employees. Can you explain why this immense increase in staff has happened at CPPIB? Is this all part of the moving from passive to active investment?
I'd say the two factors, or 2 or 3 factors that affect the growth, the number of people. One is the increase in the size of assets that we have under management over the time frame. So I say we started if I take 2010 to 2019, our assets increased from 127 billion under management to the 392 billion today. So that'd be the first thing. Second thing, as you point out, active management does take more expense to actively manage, to have the skill to outperform the passive alternative. We need the teams who have the expertise to do better than average after all the expense. And that's really critical, is that we are performing after all the expense. So when we build teams, when we start a new strategy, that has to be proved out over time, so they have the skill to perform over time. Not every quarter, but over some longer period of time, so they're demonstrating skill versus what we could just do passively.
Sorry to interrupt you, but yeah. So for the total operating costs then for 2018, 2019, would you happen to have those numbers? What's the expected total operating cost of the CPPIB?
Yeah, so the total operating cost is about, just find the right tab. It's about 32 basis points of cost, which has remained steady. I'm
just asking for absolute numbers, not the percentage.
The absolute number. So the total operating costs.
Because your operating cost has gone up
Exactly.
like more than 100%.
So the total operating expense, $1.2 billion, so 32.8 basis points of operating expense, which is in line with the 5-year average versus the assets under management.
According again to the Library of Parliament, over the past 10 years, the difference, the net contribution, so the contribution amounts is what all the Canadians who are watching this, in case they're worried about their investment, is the total amount collected by the Government of Canada, put in, and then the total amount withdrawn as contributions, and that's the net. And it's been going down every single year that I can see here. It went from $7 billion in 2007, 2008, and it's down in 2017, 2018 to $2.7 billion. That would be the difference that's being added to the basic amount. And then there's your investment income that you have, and the investments you make are based on that net contribution amount. What was it then in 2018, 2019, and what does the future hold for the fund? Because if that ever goes negative, that means that the taxpayer is going to have to put in more money. The Government of Canada would have to make up the difference, would it not?
No, that's with respect. That's not how it works. So it's anticipate that tailing off of net inflow has been anticipated by the Office of the Chief Actuary for many years now, and so it's made up by investment returns. So gradually, over a long period of time on the base CPP, there is more of the benefits that need to be supported by investment return, but it's a relatively modest amount over time.
Okay.
On the additional CPP.
Can I just interrupt you, sir? I'm sorry, because I got my 2-minute warning that I had asked for. The switching of subject is the CPPIB and Mr. Leduc, I think you were quoted on this, has started a human rights review specifically on China. And this is where I want to ask you a question now. The Chinese government has interned between 800,000 and 1.2 million Uyghurs, Muslim Uyghurs in this westernmost province. I have constituents of mine who've come to see me over the past few weeks because they have family members who've been interned. The CPPIB has invested in the Hangzhou Hikvision Digital Technology Co. and Zhejiang Dahua Technology Co. One of those companies is directly owned by the Chinese military, China Electronics Technology Group. Why is the CPPIB still invested? And if you divested yourselves, please let me know. This is a major human rights violation of the Uyghur population, the Muslim Uyghur population in China. These two companies I mentioned you are invested in, they are also heavily involved in the manufacture of camera equipment, combining video surveillance and advanced computer recognition technology involving gait, which is the speed of your walking, and facial recognition. Like, they are directly involved in the repression of Muslim Uyghurs in Western China. So if you are not involved anymore, please put it on the record that you've divested yourselves. If you're still involved in this, why?
Do you want to address it?
Very important question. Thank you for that. So if you think of CPPIB as we have more than 24 investment programs, and the way to classify them are the ones that fall into the broad category of fundamental investments. So we look at the details of a specific company, asset, or stock. And that's really taking larger positions in fewer companies. Then there's the broad quantitative one. And quantitative there is taking very tiny, relatively tiny positions across the potential 10,000 companies of securities around the world. So 2 of our programs fall into this quantitative. And what our investment programs look at, generated by computers and algorithms, is looking for factors that may or may not read what are the particular operations of a particular company. The 2 assets or companies that you've cited fall into that category. So that just gives you a context in terms of how they ended up in our portfolio. Having said that, we're responsible for anything that's in our portfolio. On a human rights perspective, it's not a recent event that we factor in human rights. We've been factoring human rights for more than a decade, integrated into our investment decision making. We've been able to do that in a very deliberate way in the fundamental, because those human rights factors or ESG factors as well, or reputation factors or political risks, are part of that fundamental analysis due diligence. Until recently, it hasn't been practical and it has been very cost prohibitive to apply that type of assessment across a potential of 10,000 holdings. What we've recently done, and this is and it was predated coming to light those two assets, is we found a tool that will allow us to identify red flags, including human rights. So we've just recently put in that tool. It allows us to continue with our integrity of risk-adjusted return. And so what I can tell you is we are looking at those specific positions today related to the issues that you've identified in terms of human rights. We disclose our investments on the fundamental side or dispositions in the same way that a publicly listed company would do, in a timely, continuous manner. Because of the nature of 10,000 holdings potentially, what we do is we disclose the holdings annually in terms of the thousands of holdings. And so we will be updating those lists at year end once we've made the investment decisions. So what I can tell you is those two assets have been red flagged. We're applying our ESG reputation, human rights, and political risk associated with that.
Thank you. We're well over, but I'll go to Mr. Dussault unless you have an absolute necessary. Mr. Dussault, I better go to you. We're 3 minutes over.
Merci, Monsieur le Président. Merci, Monsieur le...
Thank you, Mr. Chairperson, and thank you, gentlemen, for being here with us today. This is a crucial issue of crucial importance, and of course, this committee appropriately reviews your role each year, because we have to be accountable, of course, to Canadians, as do you. We're talking about Canadians' savings, taxpayers' funds that are invested, and we hope that the rate of return will be satisfactory in the eyes of investors, i.e. Canadians. So it's important that we have this discussion for that reason. Now, one of the questions I have regarding your investments, which in 2013 through 2015 created a bit of a stir, and that is your investments in farming. In Saskatchewan in particular, I know that that was controversial and that you reviewed that issue in-house regarding the purchase of farming lands in Quebec. Well, there are foreign funds that buy huge swaths of land, farming land more precisely, and with the rising prices, it becomes increasingly difficult for farmers back home, in small-scale farmers, to have any acceptable rate of turn. And this seems to be an increasing problem both domestically and abroad. So I'd like an update on those particular practices of acquiring huge swaths of farming land, both domestically and abroad, and if you take those factors into consideration when you review those kinds of practices.
Yeah, let me address that question. It's a good question. One of the programs that when I sat in the seat and took over as CEO, we reviewed again the programs that we had, the different investment strategies we had. And when we looked at that particular strategy of acquiring agricultural land around the world, which seemed, theoretically to be a very good idea for a long-term investor. It's one that's aligned with, population growth and some people's improving wealth and ability to buy food around the world. So it seems something that would be aligned with a long-term investor and less subject to sort of short-term market movement. So it seemed like a good strategy. The challenge was exactly as you've identified, which was the local challenges of buying farmland were really challenging, not just in Canada but around the world. So we'd identified several different markets where we thought we could buy significant scale of agricultural land. And I say everything we do has to be scalable, otherwise, the costs we have will. It doesn't make sense. We need to keep our costs under control and have programs where we can have a few people and do very scalable investments. So the challenge was, and when we actually tried to come and to accumulate significant amount of land, there was a lot of resistance and different challenges in different markets, whether it was in Canada or Australia or Brazil. In the US, we had managed to accumulate one very significant platform. At one point, we were the largest owner of standing irrigated row crop land in the US. We owned a company called Agricultural Corp of America. But given the challenges we had in the rest of the program, and also where pricing had gone, we decided to divest that. So we sold that land program in the US, and we have scaled back, and we no longer have that program of trying to buy agriculture and accumulate agricultural land around the world.
Donc, vous avez arrêté cette pratique pour l'instant.
So for the time being, you've put an end to that practice, and moreover, you've divested yourselves of those investments. Well, that's interesting to know. It doesn't necessarily address the broader problem of other foreign funds that have taken a foothold in Canada. I'm more familiar with the Quebec context, but I'm sure it's the case in other provinces where it's becoming increasingly difficult for small family farmers to get access to farmland to produce quality Canada-made homegrown products. Another question with my remaining time, the whole issue of ethical investments, monitoring and following of good corporate practices of the companies that you've invested in or have holdings. And my colleague raised the question already of the two-tiered kind of system. One way of predicting problems upstream, and then another method. What are you doing to ensure that Canadians' money isn't being invested in tax havens and in companies that have dubious taxation practices and whose sole objective is to pay as little in tax as possible? And what kind of pressure do you bring to bear on these companies? We're fully aware of the problem, of course, but I'd like to know what reach or influence you have on these companies in terms of their boards and any other pressures that you can bring to bear on those companies.
Well, I think when we engage on ESG matters and when we engage with companies that we have investments in, obviously one of the areas is making sure that they are complying with appropriate tax policies and the tax regimes in the companies that they in the countries that they operate in. So it would certainly be an issue for us if we found that companies were not complying with that, and in particular where we have large direct investments. That's something that we'd insist on is those companies are complying with all the relevant tax requirements in the countries in which they operate.
Okay. Thank you all, Mr. Sabero.
Thank you, Mr. Chair, and welcome, gentlemen. One of the things I get from door knocking, you always hear some feedback from residents, and this actually past weekend, one resident, we were talking about retirement. We use we want to ensure all Canadians have a secure and dignified retirement, and we have the enhanced CPP, which we brought in and signed with all the provinces. Great to work collaboratively with all our provincial partners at that time. Also, there's an actuarial assessment of the CPP that happens one in September 2016. It's triannual. One will happen in September 2019. For the folks, the wonderful Canadians listening at home today or watching at home, I want to make sure they understand that the CPP is going to be there today, and 10 years from now, and 30 years from now, and it's actuarial sound. Can you speak to that, Mark, please?
Yeah, with pleasure. And this is one of the messages that Michelle and I and our organization are trying to get across in Canada, because it's one that there's a troublingly low awareness amongst Canadians about the robustness of the Canada Pension Plan. And I say don't believe me, believe the Office of the Chief Actuary, because that's where these reports come from and the analysis. And the Office of the Chief Actuary, as you said, in 2016 in the last triennial review, and at the time of the the enhancement of the CPP again, published reports confirming that the CPP is sustainable not just over 10 years or 20 years, but over 75 years based on their projections. And again, we anticipate, obviously we'll have to wait for that triennial review this towards the end of this year, but we anticipate that will be confirmed again. And I think that robustness and sustainability of the plan is something that all Canadians should have confidence in, and not either be troubled by the 20-year ago history, or when they look across the rest of the world where plans are not sustainable. Canada's plan is sustainable.
The unfunded liability that exists in countries around the world in terms of their pension or Medicare obligations is huge. Going to another topic, probably on the other side of the tangent. CPPIB obviously entertains a lot of external managers, has contracts with them to manage assets, to look at assets. Obviously, there's on the operating expense side, I've just read through your statement for fiscal year end, and I just wanted to get a sense of your judgment in using external managers rather than bringing it in-house. Last year was $1.6 billion in external management fees, total operating costs of roughly $3.3 billion when you add in transaction costs. I understand that, but we need to hold organizations to account. You're here today at our committee, and I really want to understand that, ensure that these investment management fees you're paying to external managers, what's your decision making in terms of not going in-house? Because you have the size to bring a lot of stuff in-house. Mm-hmm. But I wanted to get your thoughts on that, please.
Yeah, absolutely. So most of the programs we do run in-house, and where we can where we can be competitive versus other investors around the world, net of costs, then we will do that. I mean, the example that I've cited before in front of this committee, which still holds true, is our infrastructure program, where we manage that entirely in-house. And if we estimate that if we did that externally, it would cost about 10 times as much money to do that versus the cost that we run by doing it internally. But it's a program where we believe we can have a small team that continues to be competitive versus the best talent and asset managers around the world who are competing for infrastructure. We can't say that for every single asset class. I mean, talent in investing is extremely scarce and expensive. And there are top decile managers in the world, whether in private equity or in public funds, that we think in the long term outperform even after all of the costs. Yes. But we're extremely conscious of the fact that when we're paying that money, that we need those returns net of costs to exceed anything that we could do internally.
Of course. If I can just stop you there, because I do want to go to when we're talking. The Bank of Canada has identified climate change as a risk. Mm-hmm. You've spoken about it today. In terms of your review on the companies that you've invested, both on the equity bond or on the physical hard asset side, where are you folks in terms of that review of those companies that are exposed because of climate change? And in fact, not just those companies directly, but indirectly that may be impacted via climate change.
Yeah, it's a massive issue, and one that we think is a really important issue for long-term investors. Climate change is happening. And we need to be able to understand all of the risks associated with it. And those risks are multifaceted. They can be geographical change, they can be regulatory change, they can be customer preference change. There are a myriad of changes that are happening. And we need to be able to anticipate where they're going and make sure that the investments that we're making, we're doing so at valuations and with anticipated returns that compensate us for those risks that we're taking on. And that's key when we look back at what we're charged to do by the acts of Parliament, which is to maximise returns without undue risk. We need to not just understand the returns, but all the risks associated with it. So we have both a top-down review of all the risks that are in our portfolio, and then every investment that we now make, every direct investment now has to go through a screen of what are the climate risks involved in that particular investment.
Thank you.
Mr. Polyev.
You mentioned the trouble the CPP was in 20 years ago. That trouble resulted from the fact that the the CPP was then heavily influenced by politics. Politicians believed they could direct the CPP to lend to or buy assets that were politically convenient for the politicians. In the mid-90s, the then Liberal government made an extremely wise decision, and that is to depoliticize the CPP, to turn it into a true investment fund, put professionals with real private sector track records in charge of the portfolio, and let them invest it with a simple and clear mandate. Maximize returns without undue risk. The government, to its credit, has appointed you to this important task. You have an exceptional reputation and track record, so I commend them on that appointment. I am worried, however, that slowly but surely this government is trying to repoliticize the CPP, to encourage, through public declarations by ministers, trendy investments that make for good headlines and talking points, to have you fund advertising in favor of political decisions, and to direct your investments based on the latest trendy causes that have captivated the present government's imagination. As I see it, CPP exists for the sole purpose of the 20 million Canadians who are part of the fund. You have really two stakeholders, only two stakeholders, workers and retirees. That's it. You want to improve social justice, get a better return, as you have been, to your credit, because that minimizes the cost to the worker and maximizes the benefit to the retiree. You want to advance the cause of women and Indigenous people? Well, there are millions of them who are counting on you to turn their contribution into a secure and prosperous retirement. Stick to that basic mandate, and you will advance all the great social causes that politicians love to drone on about. I want to get very specific here. How many, in the most recent reporting period, how many bonds, how many in dollar value, how much bond issuance did the CPPIB perform?
Okay, I'll probably have to get back to the clerk with the exact number of issuance over the last year, unless you have it at hand.
Well,
Michelle.
we're just I don't. Yeah. Maybe I could just address one of the points that you made, and while we're looking specifically on the point around advertising and reaching out to Canadians. One of the rationale, and this is a CPPIB decision, and had nothing to do with any of our stewards. The precise rationale is exactly what you've indicated, is our own concern around the potential for the politicization of CPPIB in the future. Any financial system requires public trust as a lifeblood. We see that around the world. And if you look on our submission on page 6, it's a very worrisome, stubborn trend around low public trust in the system. So our view, in good times, that's one thing. Yeah. During rough waters, that's when we will need that public trust, so we are not politicized. So I just wanted to address that point, that it's
okay.
To deal with.
I'm sorry, I'm just on a very limited amount of time here. Yeah. How much money did CPPIB raise in bond issuances in the last reporting period?
Yeah, I'll get you that number through.
Can I then?
But we have we have 30 billion outstanding as of today. So it was a few $1 billion. I'll get you the exact number.
And what is the purpose? I understand why a pension fund buys bonds.
Yeah.
What is the purpose of a pension fund selling bonds?
Yeah, that's a great question. By the way, if I could just make one small correction to what you said earlier, I'm not appointed by government. I'm appointed by the board. Independent board of directors. Yes. So it's the board of directors who chose me.
We'll give them the credit. I was being overly generous to the government and giving them credit for your appointment. But
go ahead, take the time and answer, Mark.
Yeah. So why do we issue bonds? So we issue bonds to get to the right risk level that we want, that we think. So we when we manage the portfolio, we target a level of risk for the portfolio we think is an appropriate level of risk, and then we maximize returns at that risk level. And it allows us to have a very diverse number of investments across what are relatively low risk investments, for example, real estate, or across infrastructure investments that are low risk, and then we can get the risk back up to the target risk level by using some leverage, and that's what we're doing.
Okay, we will go to Ms. Rudd, back to Mr. Kamish, and back to Fragascatis. I don't know, Mr. Fragascatis and Mr. McLeod can split some time so McLeod can get in. Ms. Rudd.
Thank you, Mr. Chair, and thank you for being here. And one of the things that I think as an organization you are doing well is you're helping to educate people about what it is you do. Because I think up until fairly recently, the Canada Pension Plan was this thing that was over there kind of behind a door and really wasn't sure what it was all about. So I think Canadians have had an opportunity to sort of peek behind the curtain and say, producing the list of who what the investments are, talking about returns, talking about the 75-year horizon, and the not necessarily the methodology that will get us there, but the confidence that we'll get there. And that goes back to the public confidence piece, and I absolutely agree with you on that, Michelle. A couple of things. My colleague suggested that you were looking at things that were trendy, and I hope he's not suggesting that climate change is trendy, because it is one of the emerging themes that we're hearing from investment around the world. And you mentioned it in your remarks. You also talk about the inaugural green bond. Can you tell us a little bit about what that green bond is and why you did it and what the what the results of implementing that have been?
Yeah, with pleasure. So we issued the green bond. It actually happened, I think, on the day I was here last year. Was the first bond issue that we did. We did a $1.5 billion Canadian bond issue, and we followed that up with a euro issuance. And what we're using it for is to fund investments in qualifying areas of our investments. So renewable power is one example. So we used it to fund a number of our renewable power investments, both in Canada and around the world. And also LEED certified, so green certified buildings also qualify. So a portion of our real estate portfolio can also qualify for that type of investment. So, and we were very pleased with both bond issuances. They were very very well received around the world. There's a lot of money that's dedicated to green finance investment. So it's something we will probably continue over time. So
thank you for that. I just returned from 3 days at the Clean Energy Ministerial, which SEM 10 has just wrapped up, and 25 ministers from around the world come and talk about clean energy. And of course, a lot of the conversation was around climate change. And as Canada was hosting this year, what we did was we brought in 70 young people and to listen to them and their concerns about climate change, their concerns about, as government and businesses, how we are recognizing that risk and how we are addressing it in a way that will ensure that they indeed have infrastructure and other things that will withstand what we know is going to be a challenging time. The Canadian Insurance Board has said that last year there was $1.8 billion in insurance-related payouts that were related to climate change. And you talked a lot about infrastructure. Can you talk a little bit about how you actually sort of factor that in to that risk into what you're doing, particularly in infrastructure, because infrastructure is a huge piece of your portfolio?
Yeah, it's important also, not because it's just a large part of our portfolio, infrastructure being a large part of our portfolio. It's about $33 billion of investment, but also because it's super long-term investment. So we have to consider the types of changes that can happen over the longest period of time. So it's something that we look at and examine. I say there's a whole raft of issues that we look at, whether so it could be physical change that's going going to happen to the assets that we're investing in. It could be technological change that's happening. For example, electricity grid investments that we have around the world could be disrupted by more local power generation rather than everything coming from one central power station, and that's something that we have to be aware of. And as more storage technologies improve, we anticipate they're going to grow at a very rapid rate. We anticipate storage is going to grow 5 times in the next 5 years. For example, that's the fastest growing part of renewables. That can disrupt a lot of what we thought were more stable long-term infrastructure investments around the world. So it's a really complex and multifaceted area that we look at, but we look at every single investment on that basis.
Thank you. Apparently, I'm out of time.
Mr. Kamish, and then back to Mr. Fregascatus McLeod.
Thank you, Mr. Chair. Can I get a 2-minute warning?
Yep.
Thank you very kindly. How much was the ad buy for the NFL playoffs in January?
So the total was $300,000. For clarification, we never acquired any time on any NFL game. As part of the rotation that networks would do, it was a freebie. What we did is
it was free during the playoffs?
Well, it was Canadian NFL. Just it was the broadcast. It didn't broadcast in the U.S.
Still.
Yeah,
I'm an NFL fan,
so what we did is we targeted demographics. So we looked at programs and channels where we would hopefully achieve a greater number of millions of Canadians who are.
So what was the reach?
I have the impressions number. They're into the tens of millions. I'm more than happy to provide that. We were very pleased with the reach.
When do you think you could provide it to the committee?
We could give it to you today. We could give it to the clerk today.
Today? Is that a hard commitment?
It's a hard commitment.
Sorry, you sound very reasonable, but the CMHC keeps telling me they'll give me stuff, then they don't give me the things they agree to at committee. So you seem reasonable. I'm going to take you at your word that you'll give it to me today by end of day, business day.
I may even be able to give it to you before I walk out of this room.
Fabulous. Fabulous. I'm going to... That's very impressive. I'm very impressed by them. Unlike CMHC. I'm going to go back to my human rights question one more time. Because these concentration camps, I'm going to call them, because that's what the Uyghurs, the Canadians of Uyghur heritage have called them. That's basically what they are. Euphemistically, the Chinese government calls them re-education schools, where they do training and education, but they're internment camps. Let's be serious. This is over half the population has been interned in the province of Xinjiang. The Chinese official who runs that province is the same who ran the Tibetan province and ran the oppression mechanisms of the People's Communist Party of China's system against Tibetans. So I'm going to ask you to give me a very cold answer beforehand that these two organizations, these two companies were red flagged. Will you commit to divesting CPPIB funds, the funds that Canadians are paying, like all of us here, every single Canadian is basically paying into these companies in equity stakes to facilitate the oppression and repression of Muslim Uyghurs in Western China for nothing more than their ethnicity and their religion?
Our commitment has to absolutely be tied to our investment programs. It can't be a personal decision. So, we could agree with you. It can't be an individual having a value judgment and, flicking a switch and making a divestment. What we're committed to doing is to taking very seriously the issues that you've identified and making sure we put them into the process of an investment decision making. Otherwise, if you think of, again, 10,000 securities around the world, if we were to make decisions based on, what we may believe or we may know or we may not know, it really goes to undermining what's the risk-adjusted returns.
Mr.
So our commitment is to applying
I want to put it on the
process.
record so you have the information, but Jim Millward's the professor of history at Georgetown University. 2-minute warning? Thank you, sir. So Jim Millward, professor of history at Georgetown University, has done ample research on this case. If you need to find more details about it, I'm going to suggest the Seneca podcast with the two hosts of it who speak immaculate Mandarin as well. It is a wealth of information on this particular thing. They spent an hour with experts discussing about it. This issue has been covered by the BBC and by other international organizations. In fact, Human Rights Watch has written China's Algorithms of Repression, which identified Hikvision, one of these companies, a Hangzhou Hikvision digital technology company, as the winner of a contract to supply China's integrated joint operations platform. That is the platform being used to oppress not just Muslim Uyghurs in the province, but also dissidents, democracy activists, human rights activists, lawyers across the People's Republic of China. So again, I know you're saying you can't say it to me right now, but this is both an operational and a board level decision. It needs to be made much faster than, end of year type of thing, because these camps are expanding day to day, week to week, month to month. And there are more Muslim Uyghurs who are being oppressed in this way. So on behalf of my constituents, I'm pressing the point that you need to make a decision much faster than in the next 5-6 months.
Yeah, I think, just to add to what Mr. Leduc was saying, I think, this is something that we are aware of. We've been looking at for a little bit of time now to make sure that we are aware of the risks around these investments, and we are going to put them through this very systematic process we now have for. These are not direct investments. Again, just to remind you, these are ones that are in indices. They're just in the quantitative programs, and they're just part of it. There's very small investments, part of an index. Having said that, it's something that we've now expanded these processes so that it captures those passive index investments, and we're going to put those through that rigorous process that we have in place, and that was something that we planned previously to do.
We are going to end it there, and thank you for that exchange. I think the message has been put and hopefully heard loud and clear. Mr. Fragascatis.
Thank you, Chair. Thank you to both of you for being here today. I have one question. How well funded is the fund compared to other funds in other industrialized democracies where institutions have also been created to prepare citizens for retirement?
Yeah, so I think the important headline is the fund is sustainable, very comfortably sustainable. And again, I refer back to the Office of the Chief Actuary and the reports there that have consistently come out on a triennial basis. And again, when the enhancement to the CPP was made, he published 2 other reports at that point. And they have consistently confirmed that the fund is sustainable over the 75-year time horizon.
Okay, that's fine, and you've been very clear on that, and that's a great thing to put on the record, and a great thing for Canadians to know. It provides enormous reassurance. But how do we compare? How does the fund compare to similar funds in other countries? I mean, where do we rank on the list?
So I'd say
in terms
that
of
one
long-term, the long-term viability.
Yeah, one of the things to look at is the anticipated investment return level. So the Office of the Chief Actuary anticipates that we will make returns of 3.9% over inflation on the base CPP over that 75-year time frame. I think you'll find those assumptions in other countries, for example, the US pension funds have much higher return expectations in order to get to their sustainability estimates. And the question is, in a low interest rate environment, whether those numbers are achievable. So we've comfortably exceeded 3.9% over inflation over the last 10 and 20 years. So, but so that's one of the ways of looking at it and comparing is are those estimates reasonable in other countries?
Thank you, and welcome back. When you came before this committee last year, we had discussed CPPIB's efforts to become a more inclusive and diverse organization, and in your submission, you had noted some of the steps that have been recently taken by your organization, and I had asked you specifically about having targets for people of color and Indigenous employment, and you had stated it's something that we should look at over the next year or so. And by the next time I come here, I should have a crispier answer for you. So with that in mind, I'm going to ask you, do you have that crispier answer for me today?
I do. So we have a target today of 1.3% of our Canadian offices or Canadian office to be Indigenous Canadians, and that's the target we're aiming for.
And my final question is, you mentioned that your organization is in your report that you're required to host a public meeting in each of the participating provinces every 2 years.
Mm-hmm.
Could you clarify if that includes the North, the territories, and if you have been including the territorial North in your tours?
So I'd say a couple of things on that. First of all, what was required in the Act doesn't require specifically the Northern Territories, but we have presented to the ministers and staff. I had the pleasure of presenting to all of the ministers in December. And at which the territories ministers were there and their staff. And I think it's something that we're going to expand our engagement into the Northern Territories.
Thank you.
Okay, then thank you very much for the discussion. I believe you're going to get back to the committee with further information, some really fast and some maybe a little slower. And congratulations on your efforts in working for Canadians. With that, we will suspend for 5 minutes and go into committee business. Point of order. What's the point of order?
Mr. Chair, I see that in the agenda today that we're moving to committee business. That's what you're about to do. But I see it's in camera.
Yep.
And it's not the usual practice of this committee to do committee business in camera. So I'm just wondering, why are we moving in camera?
It was just a decision that was made to move in camera. So, I mean, if you want to move a motion to do otherwise, we can and see where it goes.
With the decision from whom to do that?
I guess it was us that made it. Was it David?
Well,
I'll accept responsibility for it. But if you, thank you, gentlemen. Don't want to hold you up. I know you're trying to get that information for Mr. Kamish. There was a number of motions and stuff that we needed to deal with, and so we made the decision to go in camera. Sometimes they're open, and sometimes they're not.
Well, I would move that as the usual practice of this committee, that committee business be done in public, and unless there's particular subject that needs to be in camera, I will be considering.
Okay, there's a motion on the floor to do committee business in public rather than in camera. I want to make a couple of quick comments, and then we'll go to Mr. Polyev. I believe you had your hand up. Go ahead.
Sorry, you said you wanted to make your comments first.
No,
Oh,
I'm fine.
I don't see what we have to hide here. Just keep it open. The default should be towards transparency. I don't think there's any sort of intensely personal information or commercially sensitive data that would come out of the meeting. I can't imagine that the government would plan to release information that would affect the stock market or some other commercial sensitivity by having the meeting out in the open. And as a result, why don't we just default that way?
Well, normally we do. We do. There was a good reason for going in camera, and it relates to the pre-budget consultations. Normally we do that in camera in terms of how we're going to do those fall pre-budget consultations. The rest, I have no problem with it being open, but on that specific point, I think we need to discuss that in camera. Mr. Dussault.
To add, I'm not against in-camera discussions in some particular issues, like discussing witness, because there's personal names and everything, and those kinds of matters. But I think, as a general rule, we should be in public, and when we come to issues that needs to be in camera, that at that point we do move to go in camera.
Okay, so can we we do have are we in agreement to going in camera, deal with the pre-budget consultations first, because we have to do that, and then open it up to public? Are we okay with that? Because that one we really need to deal with in public, and I forgot that was the reason, and we made the whole meeting in camera. Mr. Fragiskatis.
No, Mr. Chair, I think we should stay on the path that we were originally on. Let's move in camera and stay in camera. That's my view.
Okay, we'll have to go to a vote on the motion then. You have a motion on the floor. Are we ready to vote on the motion?
Recorded vote.
Recorded vote.
Make it awkward.
All right, and the motion is, Mr. Clerk, that the meeting be held. The motion is that the meeting be held in public. Okay, Mr. Clerk.
Madame Bendayan.
No.
Mr. Fragiskatis.
No.
Mr. McLeod. Miss Rudd. Mr. Sabara. Mr. Kimmich.
Oui.
Mr. Poiliev.
Yes.
Mr. Bazan.
Yes.
Monsieur Dussault.
So the motion is lost, so we'll be in camera. We'll suspend for 5 minutes and then move to in camera. Meeting suspended.